Welcome back to class, guys. Welcome back to class. So in this section we are going to set up our products, that is the contributed product, which are the inventory used in starting the business. Like I say, the emphasis on this project is on the QuickBooks Online. But the difference between the QuickBooks Online, how to use the QuickBooks Online, or where to get some of these commands is not that different. While in QuickBooks Online, you're going to be using the invoicing and sales area to enter the inventory items. But in QuickBooks Desktop, we're going to be using the list and list command in the menu bar to set up our inventory items. That's using QuickBooks Desktop. So without wasting much of our time, let's go ahead and see what we can do. Now let's read up and see the informations here. So if you look at here, they say fill in the name of the first product inventory item. Product inventory item, you see the same thing. Select the category. First time you will have to add a new category. Now you will be adding these categories as Cassis Originals artwork, Cassis Prints artwork, and non-inventory items. So these are the categories we are going to be adding. So we're going to add this category because every other thing we're going to be adding will be an item under any of this category. Okay, so any of the items we're going to be adding these items under it. So this is category 1, which is original artwork. Original artwork. So let's go ahead. Original artwork. So if to add inventory item, you come to your list here, or you come to your company, accountant, come to your list here, click item list. When you click item list, you come to item here, click new item. When you click new item, what we want to add is an inventory item. So original artwork is an inventory item. So original artwork. So it's a heading on its own. So we are going to say the income account. The income account is going to be original artwork. Then the cost of goods sold account is going to be prints and reproduction. So it is taxable. Here we're not going to be adding the amount, the cost and the selling price. So we're going to just leave it like that. So this date, we'll change it here. This is as at 1st April. Once you're done with that, you click next, because I want to add another one. So the next one is going to be what? The next one is going to be prints and reproduction. Prints artwork and reproduction. Income account is going to be print sales. The cost of sales will be the same. Then this date will change to April 1st. When you're done with that, you click next. Okay, now the last category is non-inventory part item. So you're going to add it. I like using capital letters, block letters, or capital letters for items like this. for category heads, inventory, non-inventory. So this one, it will not have the cost of sales is going to be 0. We will not have any cost of sale there. So it's not an inventory item, so it's not inventory part item. Select that. Once you do that, I think this should be group art sales, group art classes. So that should be it. When you're done with this, you click OK, because I'm not doing anything there again. So let me change this original artwork to capital letters. I like the category heads, original artwork. Category head should be in capital letter. I usually like it like that. Alright, so now that we're done adding our category, let's go ahead and see what other information we have. Now, the initial quantity on hand will be the owner's contributed inventory. See the table below if we still continue. So as of the date of the date is as of the date. The date is going to be the 1st of April. Do not enter a quantity in the reorder point. The inventory asset account is inventory asset. Do not use, so this one is automatically on default. Do not use product codes. For all items that have a fixed sales price associated with it, enter the price, the sales price for each. So that's what we're going to be doing next. Also, make sure you associate the income account with the correct product. We're going to see how to do that. So let's go ahead. Note, all sales of original artwork should be recorded in the income account art sales, original art sales. We're going to be seeing how we're going to do that. Enter the cost to have the prints made. We're going to see how we're going to do that. Remember that all sales are taxable except group art sales. We're going to see how to do all those one too. Be sure to select taxable standard under sales tax category for all sales other than group arts classes, which will be non-taxable. We're going to see how to do that too. Cassie's Craft primarily sell 3 types of original artworks, which we have seen. We have seen that he sells original artwork, prints, large, medium, and small. So let's go ahead now. We're going to go ahead and start adding this item. So this is a table. Size for the artworks, so which is going to be under original artwork. So we have the large. Please, I will not be pausing, and if I add one, I will not pause, I'll continue, so that if I am making any mistake, you will see how I made the mistake and how I'm going to correct that mistake. Okay, so I'm not going to be pausing or doing anything. I will be doing it one by one, so you have to follow through. So large is going to be under, so it's going to be a category head. Under the category head, original artwork. Now, what is the selling price? Have the selling price of this. Have the selling price of this. 4.5. Now remember that this selling price is always, that this selling price is, all the selling price here are VAT inclusive. So we are not going to be calculating VAT separately. So it's going to be under original art. The quantity at hand is 5. As of which date? As of 1st April. As of 1st April. So that is it. There is no cost price, and we are going to see the reason why there is no cost price much more later. So let's go ahead again. Medium, originals. So save this one first. If you cross check and everything is okay, you go ahead and save. Yes, that information is just telling you that you are entering an item that is more than 90 days. That's according to the date we selected. So this one too is the same account. So I think this is 2.5. Yes, and it's 12. The quantity at hand is 12. The date the date is 4. Day is 4. Yes, I'm using next because I don't want to close the window. That's why I'm using next. So small. Small. Original. $932. Selling price is 900 and it's 32. Quantity at hand is 32. So you're done with this, you say okay. Okay, that means I want to close it up. So you can see that it does now appear under original artwork and is indented, so it is stating that these items are under original artworks and they are indented. So let's go ahead and see which other items we are going to add. Now let's see the reason why we did not add cost price. Now sales of Cassie's original artwork should set the product income account at sales, which is at art sales, original artwork sales, which is what we have already done. Now why didn't we have the cost price? Now Cassie was instructed years ago by his accountant or tax accountant that his original artwork inventory should not have a cost of goods sold associated with it, because it is impossible to accurately determine the cost associated with his original artwork, some of which he painted decades ago. Instead, he needs to expense all his art supplies purchases. However, the print in inventory are classified as inventory until sold, and then those costs will be classified as cost of goods sold. So although the original artwork inventory will have zero cost of sales associated with it, you will enter the sales price of the inventory items. You enter the sales price of the inventory. Where am I? Inventory will be zero cost associated with it. You will enter the sales price of the inventory Cassie transferred into the business. On April 1st, Cassie contributed his personal inventory of print reproductions of original artwork to the business as follows. So these are the things, the print. Now we are going to the print items. Now we've explained why the original artworks doesn't have cost of goods sold in as cost of that's unit cost associated with it, because these are painted maybe decades ago and you cannot ascertain the cost price immediately, so we have to expense them. So now we are going to print. So print sizes, we have 24 by 36. So let's go ahead and add print items. It's an inventory item too. So it's a sub item of print artwork. So this one now is going to have the unit cost, and also going to have the quantity. So the unit cost and the cost of goods sold account is going to be print and reproduction, and we're going to have the selling price, and it's variable, so the income account is going to be print sales, and the quantity at hand is going to be 12. The quantity at hand is going to be 12 as of this date. Alright, so you see, immediately we put unit cost, it will calculate the quantity. After putting the quantity, you calculate the value of the items contributed. So once you do that, you just go ahead and say next. So let's add the next one. Please do not pause this video. I am taking my time to do it like this so that if I make any mistake, you can actually see where the mistake is coming from and how I'm going to correct it. Okay, so don't skip any process, don't skip any step, watch it through, see how I'm doing it. Then on your own, if you encounter any challenge, you can also do the same. So you have the selling price. We have the selling price. So vertible, we have the print sales account. Then we have this should be 48 as of the date. The date's April. Next, yes, go ahead. Last but not the least, under the category print, a sub account of print, we have 121. As the quantity, we have this 7.75 as a cost price. We have 7.5 as a cost price, and we have 19 point this as the selling price. 19 point this. Then we have this as the quantity at hand. Quantity at hand as of this date. As of this date. As of this date. So once you're done, because it's the last item, I'll just say okay. So once you say okay, we have added this item. So let's go ahead and see what next. So like I said, anywhere you see a blue highlighted text like this, it is important you read it. All the prints in the table above should have the following: income account to add sales prints. Is that what we have? Income account. Income account to add sales print. That's sales print. That is what we have. Okay. Now, expense account should have this cost of goods sold account. Now, cost of goods sold account. So where is it? Where is expense account? Let's see. Expense account, cost of goods sold account. Yes. Cost of goods sold account. That is it. So this is what we have: printing and reproduction expense. So that cost of goods sold. Okay, so we are good to go. So let's go ahead and see. Note: QuickBooks will automatically credit the opening balance equity account when you enter the print cost. Thus, you must prepare a journal entry to move each print size balance in the opening balance equity to owner's investment account to owner's contribution. So what does it mean? If you look at it, because this business has been in existence, QuickBooks automatically put these values as opening inventory, as opening balance of equity, that's money contributed, assuming that this business has been in existence before. But what we want to do is, we know that this business is just starting officially, so this account should be the contributed inventory. So this amount you're seeing here should be the contributed inventory instead of it being here. So what we're going to do now, we're going to prepare a journal to move this amount into the second account, owner's contributions. Okay, so let's see how we're going to do that. So you come to your accountant here, and click make general journal entry. So remember that equity account is a credit transaction already. So which of the account are we crediting? So the account you're going to be crediting is owner's equity account. Owner's contribution, which is this. That's what we're going to be crediting. So let's see how much is that. 35487. 35487. We're going to be crediting. Okay, first of all, let's debit the account, which is opening balance. We're going to debit it so that value, the debit amount first. Opening balance. So opening balance, the opening balance is going to be 3458. Sorry, 3548. 3548.75. Contributed. The description will be contributed inventory use in starting the business. So you now come here and say owner's contribution. So that is it. So once you do that, the date should be surfaced. Once you do that, save and close, you see that the value has been moved. Now the value has been moved from this to this. So we are now done. We have cleared that aspect. Now. In addition to the original art and prints, Cassie has several non-inventory items that need to be added. Okay, let's go ahead and add those non-inventory items. So these are the non-inventory items. Service are non-taxable. So the group art sales, the group art class, which is this, the group art class, that's what we're going to be adding. The group art class. So let's go ahead and add that one first. Now it's going to be under non-inventory part item. Group art classes, going to be under this. It has a selling price. But it doesn't have this. So this is the selling price. So it's going to be under group art sales, group art classes, income account. When you do that, you click next. Now I come back and say custom art, original art. So custom art is original art category, income, original art category. That's the income account. It doesn't have any unit selling price. So we have the consignment art. Remember we talked about consignment income. The consignment income is for item contributed, item displayed by his friends in his store, and when he sells those items, he now track them. He's paid commission on those items, so it's going to be consignment income. It's paid commission, so it's important you also track such item. So we have unusual sales, sales of PPE, unusual sales. So it's going to also be under what? Gain on sales of property. So it's going to be so other income. So we go ahead and say okay. So we have added those items. We are done with the items. Now, for all the custom assets, Cassie Craft requires a 50% deposit at the time of order and the balance when the buyer picks up the artwork. So this is just for as part of their company part of his company policy to make sure that he accepts and he collects 50% deposit on all custom artworks. Now remember that this is the only non-taxable item, right? That is the only non-taxable item. Did we actually do that? Custom art sales. Classic also display. Remember, this is the only non-taxable item. Let's see. Non-taxable item. This is 2. This one is non-taxable. Let's go ahead. Cassie also display and sells. I'm coming, let me verify something. That is why I say you have to be following me through. Don't skip any part of this video because you don't know where I may make mistake and I'll correct it immediately or what. So just follow me through. So let's see. Cassie also display and sells consignment pieces. He earns his 20% commission on each piece sold. The consignee sets the price. So Cassie keeps those records in an Excel spreadsheet and does not enter the price in QuickBooks unless he sells the pieces. In other words, the consignment inventory is not an inventory item, but you need to set up a product item or a product line item to handle the transaction. However, make note of all the consignment sales because in order to complete the sales transaction, you need to make a journal entry to move 75% of the sales from the P&L to balance sheet as consignment payable. That is if you have not paid it immediately. Okay, so we're going to see how to do that as well. We're going to be seeing how to do that. So let's go ahead and see what next. Sales of PPE will also require a journal entry to remove the item from the balance sheet and reduce the gain or increase the loss on this sales. The transaction is not complete until this journal entry is made, so you have to take note of that. We are still coming to that now. In the next section, we're going to see how we're going to create journal entries for all other transactions that the owner has contributed into the business. So see you in the next class.